Hi, welcome to the market view for Monday, the 3rd of February 2014. And let's have a quick look at the daily chart and see what's happening there first. Let's get a background on what the market's actually doing in the bigger time frames. If you notice that from Wednesday last week, rather from Tuesday, Wednesday, Thursday, Friday, it's red days all the way apart from Monday when the market actually moved up. So prices trying to move up in the bigger time frame and failed, and then moved back to the downside. I'm just going to show you something here to measure a retracement in the market to see how much strength there is in the market. So here you can see the market's moved down and tried to move back. The high of this bar is not as high as this bar, and this is an interesting one to actually look at here. I'm just going to spread the price bars out a bit for you first. I'm going to click on markup, annotations, and the fib retracement tool. I'm not going to go into what the Fibonacci numbers are in this video, but I just wanted to show you how powerful this can actually be when you want to measure how much strength the market's got after it's been moving up for several weeks and then stops and then moves lower and then tries to go back and resume the uptrend there. So let me just click on the high of this bar and down to the low of this bar, and you can see the market stopped here at a 76% retracement. So what it means is that the market didn't make it all the way back to the top here, which would have been 100%, and only had the momentum and the energy there to retrace up to 76% of this, or 3/4 of it. That's all you need to do in simple terms to understand the logic of this. If the market can't break above the 76% area there, the 3/4, or retrace 3/4 of the previous up move, then prices are likely to move lower. Having this information as part of your trading plan, or in the background certainly, is great, because you know that the short trades are likely to be better than any long trades. However, that said, if we look now, we can see the markets move lower from Tuesday, Wednesday, Thursday, Friday, and we've got a bit of strength coming into the market here on the overnight. However, prices have come off the high. The green that was there 10-15 minutes ago is now becoming less. If you look to the left, you can see that, let me just put on the data line there, you can see that we have a low here for the 17th of January, and prices are making their way back towards this low point. So again, I can actually just click on this low up to the high, and I can see that the market has retraced more or less 3/4 of the recent up move as well. So prices are working their way back down and heading towards the 3/4, 76% area of this recent move. So when the market moved higher up here, we had 1, 2, 3, 4, 5 consecutive days of green bars. The market was stopped in its tracks with this selling. The market then tried to move higher, but only managed to retrace 3/4 of the move, and that's the key that we've got, and clue that we are likely that the up move is over for the time being, and we're going to see a correction in the market, and then we see prices moving back down towards the opposite direction of 3/4 of the recent move there, or 76%. So that's what's happening in the bigger picture, and this isn't as complicated as it looks. Just think of it as, you know, the market's moved halfway back and now 3/4 of the way back, and the same here. The market stopped, and then as it attempts to move higher, we know it's starting to move higher because we have a green candle, and then on Tuesday of last week we can see the market moving back. It gets above halfway back to the high and then fails at the 3/4, and that's all you're looking for. Don't complicate it, don't make it difficult by thinking in Fibonacci numbers and all that sort of thing. Just think of the market retracing 25, 50%, or 3/4 of the actual move. So that's what's happening in the bigger picture. The market's in an area where it could find support, but notice also that 163, there we've got 163.94, so 164 is also an area of support as well. So should the market move lower this morning, then watch this area, because in the background we've got a lot of support there as well. So in the 30-minute chart, we've got the overnight session there for the 3rd of Feb. We can see the market's been in a sideways range. Prices are trading at the pivot low there. That's the low of the Friday price bar. That's all that is. That's the low. This is the close from Friday. So the market's put in a potential buy signal in the previous bar. The market rallied up but failed to fill it and is now returning back towards the downside there. 164.17 is the stop. The low over here is more or less in the same area. We'll just mark up. Let's just take out the check mark there. Just draw this across and then activate it and drag it across. So we've got 164.14, 14 pips away from that crucial area that we see in the daily chart. So the market's stuck in a sideways range at the moment. But now we already have the background information that we want for the market. It's not a case of just saying there's a signal, let's see what happens. So we know that the market could come back down to 164.14 or down to 164, the psychological level, before moving back to the upside there. If the market is to move higher off this signal, we're going to need to see an increase in volume in the green candles moving to the upside as the market drives up towards the DP and also the 164.50 area, which I do believe this is. It is indeed. And so we've got a psychological area at the DP area along with the scalp, so it's going to take a lot to drive through this area. If we go back to the daily chart, we've got 4 consecutive days down. There's nothing to say that the market couldn't move back to the upside as in a profit-taking situation from the short side or from the selling side, as it's called, or is known. As prices move lower, the buying overcomes the selling, and then you see the market find support and move back towards the upside. So that's also there to keep in mind as well. And you see prices just coming off the lows there as well. If you look at this in the 5-minute chart, we just remove that there. You can see that the market's been moving higher, traded up to the close. Look at the volume there. We saw 2 bars of selling coming into market, and there we have a bit of buying coming in there, a bit of support at the moment. Let's have a look and see what news is out this morning. We've got manufacturing PMI for the UK, and in the US at 3 p.m. we've got the ISM manufacturing. So it'll be interesting to see. They're saying that the forecast for the manufacturing is going to be slightly less than before, or what was previous, I should say. And finally, I've had quite a few requests about trading live accounts, and what I would recommend you do is, it's a great idea to actually trade a live account, even if you're only trading at 10p per point, because you get the full psychological measure of what it's like to be in the market, even if it is just a modest amount that you're actually trading with. And what I would recommend if you're going to go live at the moment is GKFX. And you can find this in the spread betting companies tab inside of the member section of the website. If you come down to the video here, I've recorded a quick video on how to actually set this up, and there's also a link. So just left click on this link. This will take you straight to the cashback offer that GKFX are offering at the moment. 300 reasons to apply for a spread betting account, and then just left click on open a live account and get set up there. There's also videos on the site if you're currently using Alpari and you want to take advantage of the £300 offer that they've got from GKFX to write off the first £300 of potential losses. Then say come to the members section, click on the link, and then set up the account from there. And setting up the MT4 with GKFX is no different than the Alpari, and if you need any help on that, just give us a call anyway, and we will get you sorted. Right, well, that's it for this morning. We've looked at the background of the market using the daily chart and seen where the market could find support and offer a turnaround and move in the opposite direction, along with having a look at the smaller time frames and of course the news as well. If you need any support, then please do give us a call, drop us a note. You can get that from the support contact area of the website, we'll only be too pleased to help you there. So do let us know. And that's it for now. So all things being equal, see you in tomorrow's market view. Have a great day, and as ever, thanks for watching.